Hey everyone, welcome back. Today, we're diving deep into the US stock market action from November 12, 2024, and giving you a solid forecast to guide you into tomorrow's session. If you're trading, investing, or just curious about the market's next move, stick around, and make sure to hit that subscribe button so you don't miss out on our daily insights. Let's start with the big picture. The market had a mixed session today. The Dow Jones moved slightly higher, gaining just under 0.3%, buoyed by a few standout performances in the industrials. Meanwhile, the S&P 500 was relatively flat, as the tech and health sectors grappled with some modest sell-offs, while the Nasdaq saw a slight decline, reflecting some cooling off in recent tech rallies. Today's action came as traders digested recent economic data and corporate earnings that painted a somewhat cloudy picture of where we're heading, especially with inflation data expected later this week. Now, let's talk about what moved the markets. Big names like Amazon AMZN and Apple AAPL were down as traders reacted to recent tech earnings that came in a bit under expectations. Investors are clearly getting a little cautious, considering rising costs and concerns over a slowing consumer spending pattern heading into the holiday season. On the other hand, ExxonMobil (ExxonM) had a strong day, closing up by about 1.2%. Oil prices have remained firm, and Exxon has shown solid resilience in the energy sector. JP Morgan, JPM, also ticked up by around 0.5%, riding on optimism about financials and a potential rate hike pause by the Federal. Taking a closer look at sector performance, energy was the clear winner today. With WTI crude holding steady around $85 a barrel, companies across the oil and gas spectrum saw gains. Tech, however, was the worst performer, down nearly 1% overall. Rising bond yields have been putting pressure on the sector, as higher borrowing costs can cut into future earnings. And in healthcare, it was a bit of a mixed bag as investors weighed recent earnings. We've got some big economic indicators on deck this week that could shake up the market. The Consumer Price Index, CPI, report is due tomorrow, and that's always a significant one for the markets. Traders are watching closely to see if inflation is moderating or if there's more pressure on the horizon. Right now, bond yields are still elevated, with the 10-year Treasury sitting at about 4.75%. That's a key number for investors, as higher yields tend to attract capital away from stocks, particularly in the tech sector. So, what does this mean for tomorrow? Market sentiment feels cautiously optimistic, but with a touch of skepticism. If the CPI report shows inflation is cooling, we could see a short rally, especially in interest-sensitive sectors like tech and consumer discretionary. But if inflation surprises on the high side, expect to see some downward pressure, especially in sectors that rely heavily on consumer spending. For tomorrow, here's what I'm watching closely. Keep an eye on defensive sectors like utilities and consumer staples. Those could see some love if we get a jittery market reaction to CPI data. Now, let's look at some key levels. On the S&P 500, support sits around 4,250. If we break below that, we might see a pullback toward 4,200. On the upside, resistance is sitting just above 4,300. A break above that could signal some buying momentum. For the Nasdaq, I'm watching the 14,500 level. That's a key support zone, and any dip below that could see the index testing 14,200. Alright, folks, that wraps up our stock market recap and forecast for tomorrow. As always, stay sharp, keep an eye on economic reports, and don't forget to manage your risk. In this market, it's essential to stay nimble. Thanks for tuning in, and if you found this breakdown helpful, go ahead and hit that like button. Subscribe for more updates, and let me know in the comments what sectors or stocks you're watching. Stay informed, and I'll see you back here tomorrow for more market insights.